European corporate profits expected to decline. What you need to know. European corporate profits face a slight decline. What you need to know. The financial landscape for European businesses is showing a modest improvement, according to the latest earnings projections released on Tuesday. This comes despite ongoing uncertainties surrounding global trade and the European Union's preparations for potential counteractions against significant tariffs imposed by the United States. On average, European firms are anticipated to report a decrease of 0.3% in their earnings for the second quarter, as indicated by data from the SEG-I/B/E/S. This figure is a slight improvement from the 0.7% decline that analysts had predicted just a week prior. Since US President Donald Trump announced plans for reciprocal tariffs back in February, the earnings forecasts for companies listed on the Europe-wide Stoxx 600 index have been on a downward trend. Prior to this announcement, analysts had expected a robust year-on-year earnings growth of 9.1% for the second quarter. In contrast, the consensus forecast for second quarter revenues has also deteriorated, with analysts now projecting a 3.1% decline, compared to a 3% drop noted last week. This anticipated revenue performance would mark the worst quarterly results seen in over a year. To put this into perspective, a year ago, companies within the Stoxx 600 index reported an average earnings increase of 3% for the second quarter, alongside a slight revenue decrease of 0.8%. This earnings season is particularly crucial as it will reveal the impact of Trump's tariff threats on European businesses. Many companies are actively seeking ways to mitigate risks and develop strategies to navigate this uncertainty. For instance, Stellantis, an Italian-listed automotive group, disclosed on Monday that tariffs have already resulted in a loss of €300 million, approximately $351 million. Meanwhile, pharmaceutical giant AstraZeneca announced ambitious plans to invest $50 billion in expanding its operations in the US by 2030. When examining sector performance, the earnings of technology firms within the Stoxx 600 are projected to rise by an impressive 26.5% in the second quarter. In stark contrast, consumer cyclical sectors, including automotive, retail, and entertainment, are expected to experience a significant contraction of 23.6%, according to the LSEG data. What do you think about these projections? Are you surprised by the anticipated decline in corporate profits? Share your thoughts in the comments below. $1 equals 0.8545 euros. Copyright Thomson Reuters 2025. Click for restrictions. https://agency.reuters.com/n/copyright.html. Log in or create a forever free account to read this news. Impact of a strong euro on European markets. Brace yourselves, the robust surge of the euro is set to challenge Europe's major companies like never before. The remarkable strength of the euro this year has become a central factor influencing the performance of Europe's corporate giants, particularly as the region embarks on a cautious yet anticipatory earnings season. This assessment comes as the largest software firm in Europe, SAP, prepares to reveal its latest quarterly results, signaling an important moment for investors and market watchers alike. More often than not, tariff uncertainties cloud the economic outlook, especially with a critical deadline looming on August 1. Despite these challenges, investors remain cautiously optimistic, banking on strong earnings reports from key players on both the Wall Street and European fronts to sustain market confidence and buoy stock prices. The first wave of earnings has largely been described by analysts at RBC Capital Markets as solid but unspectacular, reflecting a market environment that is steady but far from thrilling. As we await SAP's report, it's worth noting that the company has experienced a surge in demand, driven especially by its cloud services and boosted by the growing integration of artificial intelligence technologies. Alongside SAP, Major financial institutions like Italy's UniCredit and Swiss wealth manager Julius Baer are also releasing their quarterly results today, offering a wider view of the economic pulse across key industries. Now, here's the twist that could rattle profits. The euro's substantial climb, up an eye-catching 9% just in the second quarter and 13% year-to-date, poses a real challenge for Europe's highly export-dependent economy. When a currency strengthens this rapidly, it makes European goods and services more expensive for overseas buyers, potentially squeezing profit margins. SAP, for example, openly acknowledged in April that even a 1 cent increase in the euro's value could slash its annual revenue by about 30 million euros. To put that in perspective, since the end of April, the euro has jumped from $1.1329 to $1.1688, intensifying concerns about growing currency headwinds. The ripple effect isn't confined to technology alone. Upcoming earnings from global luxury powerhouse LVMH and pharmaceutical giant Roche will also be closely analyzed for signs of how the euro's strength is playing out across other industries. Meanwhile, trade tensions remain a wild card. The European Union has disclosed plans to develop broad anti-coercion measures. These could potentially allow the bloc to retaliate by restricting access to US service markets or public contracts if no agreement materializes. This escalates the stakes, particularly with US President Donald Trump threatening to impose punitive tariffs of up to 30% on European imports should the August 1 deadline pass without a deal. And if there wasn't enough uncertainty, the intrigue around whether Trump will dismiss Federal Reserve Chair Jerome Powell adds another layer of unpredictability. U.S. Treasury Secretary Scott Bessent's recent assertion that the Federal Reserve's entire leadership structure requires evaluation has only fueled speculation and concerns about the future independence of the U.S. central bank. So, what should investors watch for today? Keep an eye on the earnings reports from SAP, UniCredit, and Julius Baer, as these results could provide clues about how companies are managing the combined pressures of currency fluctuations and trade policy risks. Curious about the latest developments on tariffs and their global impact? Consider signing up for Reuters' daily Tariff Watch newsletter, which distills the most crucial headlines shaping international trade. Here's a thought-provoking question to leave you with. Is the euro's strength ultimately a sign of Europe's economic resilience or a looming obstacle that could stifle growth? And with tariffs and geopolitical tensions simmering, how prepared are companies really to navigate this complex landscape? Share your thoughts. Do you agree that currency gains are hurting exporters, or might there be benefits we're overlooking?